because I'll tell you what I had for breakfast. I had, like the sugary chocolate cereal that kids eat. I had a big bowl of that, so I'm absolutely hyper right now. What did you have?
I had hot chocolate with a toast and jam.
Oh, very French.
Yes.
Very nice. Yeah.
And a smoothie.
Yeah. Very nice. Right, so let's get into it then, Arnaud. Welcome to the People Making Payments podcast. When we were sort of thinking about the perfect guest lineup for our first series of real payment nerds and experts, you absolutely came to mind straight away. We've been working together for almost a decade now, if you can believe it, and lucky you. So I was just, thinking that, I obviously get to see you in action a lot on sort of the sort of projects that we do at KAE and sort of the expertise that you bring to the various sort of payment providers and banks that we work with. And I felt like, I want to put the spotlight on Arnaud and make sure, we're bringing that expertise to the world, essentially. So I know it's going to be a really interesting conversation today. But as always, I'm waffling on. So let's just cut straight into introductions. Let's say that you're at you like wine, so a wine tasting, sophisticated party. How do you introduce yourself for people that don't know you and what you do?
Okay. So thank you, Shona. I say my name is Arnaud Le Saouter. I'm a marketing consultant at KAE, and I provide insight and advice to some of the largest payment companies in the world, as well as financial services companies.
Brilliant.
On a global basis.
Yeah, brilliant. And are they suitably impressed?
Most of them are, yes.
Yeah. Good. Brilliant. So, I want to just dive straight in then to some of the questions that we've got prepared today. I think, you're probably going to bring a wealth of expertise in terms of what you see in the market. We're sort of speaking with merchants, we're researching consumer behaviours, we're sort of working on these strategic challenges with payment businesses. So I think we get a very, very rounded view of the market and what's happening and sort of the dynamics and how they're shifting from sort of across the board, right? So, as an industry veteran, and I won't say how many years you've been working in the payment space, but it's a really impressive track record. How have you seen sort of the payments market sort of shift over sort of the last 10 to 15 years, let's say, in terms of sort of what it is that merchants are looking for from their payment stack?
I think they're looking for a number of things, but there are merchant needs and there are payment technologies have evolved. So if you think about 10, 15 years ago, in lots of countries, there was no chip and PIN, there was no mobile NFC, there was no Apple Pay or Samsung Pay, there was no buy now, pay later. So lots of technology didn't exist. And for merchants, it was relatively simple. They wanted to get paid, and they wanted to get paid relatively fast. And the choice of providers that was relatively limited. If they were physical merchants, they had a POS and an acquirer. And if they were doing e-commerce, they had a payment gateway and an acquirer. And it was relatively straightforward. Mm-hmm. Then with more technologies and more varied way or channels that people can use to purchase things, they become more in need of making sure that you can offer what your customers want to use at point of sale, either physical or virtual. And then we had more omni-channel selling. So the fact that people could interact in store, could interact online, could interact through their mobile phone. So that has changed massively the landscape, the needs of the merchants, and also the degree of offering. So if you look at the payment providers 10 or 15 years ago compared to now you probably have 20, 50, 100 times more providers out there offering very varied services to merchants. Mm. And that goes from payment acceptance to marketing support to fraud control and so on.
Yeah. And with that sort of like the rise of omni-channel, the proliferation of this very sort of competitive marketplace that's emerging, do you think there's sort of like a little bit of like sort of provider or choice overwhelm, a lot of complexity that's sort of been introduced to the merchant payment stack, or sort of how they're thinking about sort of organising their providers?
Yeah, probably. And I would think there's two things. One is you want simplicity, and at the same time you want sophistication. And that's the challenge, is how you have a product or a service from a payments point of view and from an acceptance point of view that is simple to manage and simple for your customers to use, and something that's sophisticated enough to meet your needs and the needs of your customer base. And that's the main challenge that merchants have to play with, and the providers the same.
So how do you think then that the relationship that merchants then expect from the payment providers sort of is evolving? So we've talked a little bit how sort of the sophistication of, you know, the actual technology is sort of evolving, but then also from a relationship perspective of sort of like helping to manage some of that complexity, have you seen a shift in terms of what merchants expect, maybe more strategically from payment companies?
There, I think it depends very much on the merchant and who they are and what they do and how they sell. There are still plenty of merchants that are relatively simple, you know, mom and pop stores, and they're quite happy with relatively simple technology and simple acceptance. The ones that have more varied business model, trade globally, and have different stream of payment, definitely need more support and more support from providers. But in some cases, I think the challenge for the providers is that making sure that you speak to the right person within an organization, because you need to really understand, you need to really speak to the person who understands what their needs are and can express them. And often they may be speaking to people in finance who don't have that perspective in terms of making sure that it's easy for customers to pay and to transact either physically or virtually. So I think it's quite important for the providers to get a really good understanding of who they need to speak to within organizations, within merchants, to make sure that they get the right level of interaction.
And presumably the sort of the drivers of choice in that buying decision might vary according to sort of the stakeholders that are involved, right? I know sort of like, you know, a lot of the work we've been doing at KAE is around sort of like buyer personas, for example, in the B2B space. So, you know, the needs of a CFO might be different from somebody who's sort of like on the tech side of the business, for example.
And then you will have the people on the sales side. The people on the sales side want to make it very easy for consumers to buy. The people on the finance side wanted to make it easy in terms of reconciliation and being paid and not paying too much. The people on the tech side want to make sure that everything fits into their systems and doesn't disrupt their day-to-day operations. So yeah, there's varied demand. And that obviously gets more, the larger the merchant, the more complex it is. For very small merchant, for micro merchant and small merchant, is relatively straightforward in the context that customers want to use different payment methods, and you need to accommodate that. But it's still relatively simple. It's when you go into the larger organizations that it becomes more complex.
Yeah, and you talked about wanting to sort of merchants wanting to offer different payment methods. We were talking earlier, weren't we, about how also these days they quite often, especially the larger merchants, might want to work with multiple payment providers, right? So they not necessarily, you know, choosing one over the other, but actually they're trying to kind of create sort of like the almost like perfect little portfolio of payment providers that they work with. I know like some of the payment companies we work with, for example, they're not interested necessarily just in new customer acquisition or new merchant acquisition, but also how do we actually grow our share of volume in accounts with merchants where they do have multiple payment providers in there, and sort of how do we differentiate and how do we actually get those volumes up? And what's your view on that?
Yeah, and I think a good example there is buy now, pay later, because you can work with one, but one only gives you certain coverage, and you may want to work with more than one because they will give you other customers that you wouldn't get if you just work with one provider. Obviously, from the provider's point of view, you need to make sure that if your key competitor is with you, for the same merchant, you have to make sure that you kind of like beat them or generate more sales than they do. So you go to market to the merchant and to the customer to make sure that you gain share of wallet.
Yeah, and in order to do that, in order to gain the share of wallet, what do you think payment providers need to kind of consider? Like, how do they sort of practically go about that? What do they need to investigate? What do they need to look at, or sort of what do they need to kind of push a bit more strongly to sort of to get the extra share of wallet that they're looking for?
Well, it's two things. One is, I mean, the key thing is going to be about marketing. It's about marketing to their customer base, but also marketing to the merchant. So delivering a service and proof points to the merchant that using them is going to deliver more sales and better results.
Yeah, ultimately, so thinking through like what's the sort of the benefit in terms of sort of like conversion or authorization or abandonment rates, so all those sort of like typical metrics that we think about.
Yeah, I mean, it's all of them, and I think now it's becoming more top of mind for merchants, the fact that you can use providers that are going to help you deliver better conversion rate, better authorizations, and making sure that the payment flow is fine, and therefore you don't have any frictions. Again, from a customer point of view, you don't the more friction, the less friction there are, the better it is for them, and the more likely they are to shop with you and to go back shopping with you. Yeah. So as a merchant, you have to make sure that what you offer from a payments point of view has to be as easy and as streamlined as possible, without any friction, because frictions mean that somebody may actually terminate and go somewhere else and don't do the purchase.
And where does this sort of the conversation around cost come into this, right? So I think like historically, payments are sort of fairly commoditized. Sometimes it's been a bit of a race to the bottom. In some cases, like where, in terms of like payment providers trying to acquire more share of wallet or even kind of gain new customers in this competitive market, what role do you think cost plays in those conversations? And I guess the sort of the trade-off, like the sort of the balance, if you like, between cost and value.
So it's interesting because I think the payment has, in my mind, has always been commoditized. From 20 years ago, it was already commoditized, and I think with the more payments technology or products and services there are, the less commoditized it becomes, because it's becoming more important to make the right decision, onboard the right payment provider to make sure that the results are going to be very good for you as a merchant. So I think the technological changes mean that for savvy merchants, cost is becoming less important, and now they are more willing to pay a little bit more because they can see that the results are going to be very positive, and you have to and you kind of like forget that it's going to cost you 1% more, but you can increase your sales by 10% and your profit by 5%, and therefore it's worth to pay the extra 1%. So I think there's definitely less cost pressure, and I think we've seen that with some of the more innovative players manage to charge a premium. So if you think about Stripe, for example, who is very very strong in the small mid-sized merchants, they charge more, but their value proposition is very clear, and they got proof points, and they work on that, and they can demonstrate to merchants that yes, it's a little bit more than using a traditional acquirer, but the results are going to be highly beneficial. And the merchant then think about it differently, from thinking about this, how much is going to cost me, to how much am I going to benefit from that. So I think we're moving. I think the needle is moving away from cost a little bit.
Yeah, so like sort of payments not necessarily as a cost center, but more of some sort of like enabler. Yeah. Like operational enabler in your business. And
it's interesting because even when I speak to finance people within merchants and I ask them, do you know exactly how much you pay for all the payment services you've got? They tell me, I'm not very sure. And they have to go into their system and actually see, well, and it's not, and actually if you go into your system and interrogate all the data you get from your payment provider, sometimes it's not very easy to decipher exactly how much you pay, because the transparency is not quite there, and statements aren't very clear, be they on paper or online. And it's quite challenging for a merchant to know exactly how much they pay per transaction. And a lot of them actually say it. Actually, I don't know exactly. I've got a rough idea, but I need to look into it.
Yeah. So do you think that I guess the question there is for the payment providers, would they do well to be more transparent about pricing, or actually do you think that there's some sort of like fees that are flying under the radar that might be scrutinized if otherwise?
I don't want to be too much of a cynic, but I think you have to find the right balance between delivering transparency, and making sure that you are profitable. Mm-hmm. And in some cases, you don't want to be too transparent, because sometimes transparency can be overwhelming. So if you are too transparent for the merchant, it's like, well, where do I start? Because there are too many numbers and I can't figure them out.
Mm. And it sounds like, from what you were saying earlier as well, in some cases, if a merchant is evaluate payment providers, yes, on cost, but also in terms of the value that they'll get, the sort of the ROI in terms of the uplift that they'll see in conversion rates or revenue that they earn. And if, a very detailed breakdown of pricing is going to be so overwhelming, in a way, it's sort of like, like to your point, you want to get the balance right of being transparent enough that they can make an informed decision. Yeah. But kind of lean into more of the sort of the value conversation.
Yeah, I think it also depends on how successful the merchant is. When you speak to successful merchants, they know that they actually pay a lot per month in terms of payment processing, but the business is going well, so they don't worry too much about it. For businesses that are struggling a little bit more, then the focus is more on where can we save money, and do we need to have all these payment providers, or can we get rid of some, mm-hmm. and what value do we get from each?
Yeah, absolutely.
But I do think that. And we'll probably talk about it a little bit later, but I think the providers need to do a better job in terms of demonstrating the value that they can deliver.
Yeah, absolutely. Mm-hmm. Okay, so my next question is around, again, sort of digging in a little bit deeper to the merchant needs that you see. We've talked about some of them already, but again, how do you think merchant needs are changing in terms of what they really need from payment providers? As well as some of, we talked about some of the sort of the value proof points, but beyond that, how are their needs evolving?
Well, I think for the vast majority of merchants, what's top of mind is growing their business. So clearly, how can they get support to help them grow their business is going to be the number one priority. There are some things that obviously are a given. The fact that, there won't be any downtime. You will get paid on time, and you won't have, and fraud will be managed. That's almost like a given. Mm-hmm. But where they need support and where the providers can deliver value is on helping merchants grow their business and sell more. And that can be, through buy now, pay later, through accepting different payment methods, and also accompanying merchants in being able to sell outside of the home market. So if you're a UK-only merchant, helping them to sell outside of the UK is going to be beneficial. Mm.
So it's about maybe, those hygiene factors that have existed for a long time, mm-hmm. like sort of the security, reliability, all those things. Those are still sort of the mainstay of payments, but it sounds like there are more strategic needs that can be
But there's still, to talk about security and safety, it's still there. It's probably becoming more important now because of the fact that hackers are much more sophisticated and so on. So there will always be some focus on that in terms of making sure that your business is safe, mm-hmm. and you don't get hacked. But yeah, I think the big opportunity is more on the sales and marketing and helping merchants to grow their business.
So You've just mentioned that sort of like helping businesses grow, whether that's through sort of like market expansion or through like within their domestic market is one area. What practical advice would you give to payment providers then if they're sort of thinking around what their offering in this respect could be or what their proposition could be, for those that sort of want to get more into sort of value added services? What would be your advice in terms of how they go about appraising which ones to prioritise?
To the providers?
Yeah.
Well, I think you probably need to segment your offering and have different streams of activity depending on the various things that you can deliver to a merchant. So in terms of that can be helping them grow internationally, or that can be helping them implementing more buy now pay later solutions, or marketing offers and things like that.
So sort of like a sort of needs-based segmentation in terms of what are the needs of the business, and then how do you organise a proposition to fulfil that need, essentially.
And then you need to have some kind of like verticalization of your offering, because there will be some merchant industry that have very specific needs. And that's what we're saying, in terms of there's quite a lot of activity in the independent software vendors that are helping restaurants, for example, manage their businesses better now. So there's quite a lot of new players that have come in and offer services to the restaurant industry in a relatively innovative way, and the merchants are quite happy to pay for that because it helps them run their business, manage their staff, and get paid at the table, for example, all in with one app. So that definitely is positive.
Yeah.
So I think thinking about it is what can we do to help particular verticals, and what product and services we offer to that particular vertical is probably the most efficient way to do it.
Yeah, absolutely. And then if we break that down even further, if you think about sort of trying to verticalize your go-to-market strategy, sort of what do you see as sort of being some of the most sort of important questions that they would need to sort of gather insights on to make that evaluation?
I mean, it's understanding the pain points of the merchants and understanding what can they do to make it easier for the merchant to deal with these particular pain points. And that can be in the way they manage their business. Again, in the restaurant industries, managing your table, managing your staffing, and so on. In retail, there will be understanding, what are your peak times? When do people buy at the most? Is it in the afternoon, or is it in the evening, and so on? And for companies that want to grow internationally, is understanding what type of markets are they focusing on, and what currency they want to be able to deal in with.
Yeah, absolutely. So sort of like understanding the pain points. And I always like to think of this as not all pain points are created equal, right? So I think it's to sort of take that one step further, which of the pain points are having the biggest impact in terms of their choice of provider, their propensity to switch, and sort of helping to sort of measure the impact, right? Because sometimes pain points, they might be really prevalent, but actually merchants are willing to put up with them. It's not actually the irritation that is going to actually prompt them to change.
You have to be able to solve the one that are going to make a difference to the top line and the bottom line.
Yeah.
So both aspects are important.
Yeah, absolutely. And what about from again, if we're thinking about entering new markets or new verticals, I guess then it's also understanding sort of what workflows or business systems that you need to integrate with, right? Because each different vertical might be working with different sort of SaaS platforms or different work tools. So I guess sort of like some appraisal of like where the payment fits within the end-to-end journey of those businesses.
And that's why it's become more complicated, because again, 10 years ago you only had one or two providers, and now as the merchant get bigger, they may have like 10, 12 different providers. And they've got a software platform that is going to be integrated with, and so on. So it's becoming much more complicated for merchants to manage all of that.
Yeah.
And that's why some of them are using payment orchestrators and companies of that kind that can help them, making sure that they've got optimized platforms and solutions.
Yeah. Why don't you think they with these that are sort of getting into the payment orchestration space? What's the benefit of doing payment orchestration to manage that complexity versus just simplifying it back down to one provider that can offer a one-stop shop?
Yeah, I mean, I think it's mostly, the whole payment orchestration thing seems to be mostly around making sure that, because you're using all these different players, making sure that you optimize at a particular point in time which one is the best to use, depending on where the customer is based, what payment method they are using, the risk of the transaction, and so on. So it's being able to calculate all that to make sure that you route that transaction through the provider that is going to be the most capable of dealing with that transaction 100% correctly, fast, at a relatively lower cost.
Yeah, so it's about sort of like both optimization and resilience at the same time.
Yeah, but interesting thing, I think it's interestingly it's more about optimization, I think, more than resilience.
So when it comes to switching behavior of merchants, what have you seen in terms of the frequency, the propensity of merchants to switch? Are they becoming more or less sticky within this sort of very dynamic environment that we've been talking about?
I think it varies depending on the merchant and the size. I mean, for smaller merchants tend to suffer from apathy, so something has to go wrong for them to really want to change. because they are very busy running their business. So if you're busy running your business, it's important to accept payment and make sure you've got it optimized. But you've got a million of other things to do, and sometimes it's not top of mind. So you may not be that willing to switch unless you get really annoyed with your provider. For the larger one, switching can be more interesting, but the problem is it's quite complicated, especially if you've got different layers, and that's quite time-consuming internally to make sure that the switching takes place. So I think there's a lot of interest from merchants when you ask merchants, they probably say, yeah, I'm likely to switch. But when it comes to switching time, they may not do it because it's not that easy to switch.
Yeah. And it might, and I know from some of the work that we've done at KAE from a sort of like brand positioning perspective, especially the smaller merchants don't necessarily distinguish that strongly between the different payment brands, like in the sense of sort of like a bit of a muchness, sort of when they look out there on the industry, we're not seeing massive differences between brand.
And that's one of the problems, because it used to be commoditized, they're still in that commoditization phase where actually it doesn't really matter because you provide a commoditized product. But now it's becoming less commoditized and more differentiated. And it's very important for providers to actually differentiate themselves more, because as you said, and a lot of them, if you ask a small merchant, they say, well, all of these sound the same to me. I don't know what makes them different. So I think there's a massive opportunity for providers to actually make themselves different.
Yeah, absolutely. And it's great because we've got some great guests on the podcast from the various payment companies, and we've been getting their views on terms of differentiation and how to differentiate. So I know that it's, in a very noisy marketplace, it's such a top of mind.
Yeah. And again, you look at a market where the number of providers have exponentially grown. Mm-hmm. So you've got far many more providers now than there were 5 years ago.
Yeah, for sure. And then within all of this then, Arnaud, there's clearly the question of monetization, right? Because we've talked about how merchant needs are changing. We've talked about the noisiness of the marketplace. And I think we can, dive deeper into sort of pricing strategy, which I know is a particular area of expertise of yours. But sort of how, just broadly, do you think payment providers need to be thinking about monetization of some of these sort of more strategic value-added services that they can offer to differentiate or to be that business partner and sort of that partner in the merchant's growth that we talked about?
Mm-hmm. Yeah, so obviously monetization is very important because that's the only way that businesses can thrive. I think demonstrating the value of their service is very important, and being able to quantify it. So saying to a merchant, if you implement our solution, your sales will go up by 5% or 10%, or your costs will go down by X, is very important. And I think they've got to think about that, and they've got to be able to structure that value proposition based on the actual way they can deliver additional revenue or lower cost to a merchant.
So very, very early on then in the sort of the ideation process, actually prioritize new product development around, okay, if we took this to market, if we wanted to monetize it, there will be an opportunity to show and demonstrate tangible ROI to the merchant, so that we have more faith that we're actually going to be able to sell this and not have to offer it for free, ultimately.
And having proof points.
Yeah. But I guess that conversation needs to come in quite early on, right, in the stage of product development.
And actually, one way you could do it is working with some merchants and give the product for free for a while, and actually ask them to test it and see how much they're benefiting from it, and being able to quantify it. And then you can see what the actual value and how much the merchant is willing to pay for that.
Yeah, absolutely. Brilliant.
Because often you will go to a merchant and say, the price is X, and the merchant will say, well, I'm not sure exactly how it's going to benefit me. Yeah. And I'm not really willing to pay unless you can demonstrate that it's worth the price.
Yeah, absolutely love that. So it's almost like bring your merchants or your customers in early, almost sort of like to not necessarily co-create the concept, but to be part of that journey of testing it, definitely. Measuring the ROI, and then advocating for that tool when it is you kind of make it available to the wider market.
Yeah, having like test pilot.
Yeah, cool. Great. Should we go to a little midway break, Dan?
Let's do it.
Your time to shine.
Yeah, and I know that everyone watching or listening will be keen to get into pricing, so we will keep this. It's called a quick fire round, and we are going to do it quickly. So these are, we've got 1, 2, 3, 4, 5, 6 quick questions for you. Ready?
Yes.
It's your moment. Your moment
Just to
has come,
get to know you a
Arnaud.
little bit better. So, first in the office or last to leave?
Not the first, often the last.
I can vouch for that. Yeah.
Yeah.
That's accurate.
I think I knew the answer before I even asked that one, I think.
Yeah.
A meeting or an email?
A short meeting or an email.
Lovely.
I don't like long meetings.
Yeah, I like that. That's great.
That's why he never comes to ours, Dan.
Yeah. Meticulous planner or figure out as you go?
I should be a meticulous planner, but I'm more the latter.
Nice.
No, I wouldn't. Maybe somewhere in the middle.
Tea or coffee?
Tea in winter, never coffee.
Never coffee. And in the
Wine
summer?
always.
Yes,
Wine, and just wine all year round?
in the evening.
Yeah.
Just to clarify.
Not that well.
Yeah, of course. No. I'm not saying that.
I'm not doing working hours.
This is a question that is going to be unique to you in this round. I won't ask it to any other guest. Paris or London?
It depends what for. Both depends.
Paris in the summer? Why?
Shopping in Paris, living in London.
Nice. And finally, what is the thing you enjoy most about your role?
What I've always enjoyed is the fact that we work across the globe, and every year we work in like 20, 25 different countries, and they're all very different. We talk about payments, but payments is very much driven by history and social trends and so on. So it's very different. It's very broad. It's very varied. So if you look at Japan is very different from the US, very different from Australia, very different from the UK, very different from Germany, very different from Italy. So it's always different.
Amazing. That's really interesting. Yeah, I like that. I like the payments driven by social trends. It's a lovely angle.
Yeah.
I feel like we could go into that on a whole different episode, but that's brilliant.
Well, I was just going to say, it's just giving me an idea for a question, and I'm just going to chuck it in there. I'm going to go a little bit.
Well, I'm done. So
here.
that's the end of Quickfire. That was great.
Yeah.
Thank you. And so
Let's
back to
go a bit-
Shona.
Well, no, because I just wanted to pick up on that, Arnaud, because you're right. I mean, the work that we do at KAE, we see so much variance in all these payment markets, and I love the fact that it is driven by those sort of social, cultural ways of life or trends and what have you. My question is, what is your favourite payments market to work in?
Well, my favorite, the most challenging and favorite one is Japan, because Japan is on one hand is still very cash heavy. So I think something like 60% of transactions are still cash. The government wants to bring that down, but it's still heavily cash focused. And you go at point of sale and you've got 25 different brands that are accepted, because they've got the standard credit cards, they've got transit cards, they've got other type of products that we don't really have in Europe. Mm-hmm. So it's quite overwhelming, but it's very interesting. So you got the old-fashioned cash, and then you got very advanced payment methods, mm-hmm. all at the same time.
Yeah. And I won't ask what's your least favourite, but what do you find is sort of the most sort of challenging payments market to work in? Or is it Japan as well?
Japan
is your favourite,
Japan,
and it's the most challenging.
Is Japan as well. The most challenging is probably the US, because it's so big. And actually quite complex, because you've got very different debit systems and so on. So it's a little bit more complex than one would think, and the scale of it is just huge.
Mm-hmm. Okay, Arnaud, so I want to dig into pricing strategy now, because I know that's a massive area of expertise for you and for us at KAE. And I think one of the sort of questions that we get asked a lot from payment provider is about how to go about pricing value-added services in particular. Why do you think that is such a big challenge in the payments industry?
Probably because it's actually relatively quite new. I mean, for a long time, you pay on a per transaction basis, and that was all inclusive, and so on. And as transactions become more, the way the pricing become more fragmented or decomposed in terms of being more complex, then the merchant is wondering, why do I have to pay for something like that on top of what I already pay for? And again, it's coming back to demonstrating the value. Is that as a provider, if you can demonstrate that the value-added service that you offer to your merchants is going to be beneficial to their business, then the merchant will be happy to pay for it. And actually, in the merchant lens study that we did, what I found interesting was that there was a very, very high proportion of merchants who said that they would be willing to pay for value-added services, which is quite a strong departure from what it used to be. Because it used to be that you ask merchants, are you willing to pay for value-added services? They would say, well, no, not really. I'm paying enough already. Why would I pay more? But again, because payment is becoming so sophisticated, the merchants that are savvier can see that there's benefit in having very specific value-added services that is going to help them manage their business better, sell more, have less friction, and so on. So there's definitely more appetite for that, as long as it's substantiated by the provider and they can demonstrate that by paying that additional fee for that additional service is going to benefit you in a certain way.
Yeah, I know that some of the like the payment service providers that I talk to, I think one of the hot topics, obviously, how you price things like AI, right? So you talked about how one of the challenges is that some of this is just quite new, like we're maybe not used to charging for value-added services. And when you think about AI, where you're sort of embedding AI into your platform or AI-driven tools, there is obviously a cost to the payment provider to develop that technology and to deliver it. But it's like, because it is all so new, it's like, how do we price this thing?
Yeah, and the merchant will probably expect that to be free, because it will say, I mean, if I was the merchant, I would say, well, you're going to benefit from it because there will be less fraud or whatever, and therefore it's good for you as well, or it will make your system better. But what would I pay for it? So you can see where the merchant could be pushing back. So I think the way around that is, it's again about being able to substantiate the value of your offering and why implementing AI is going to benefit the merchant, in particular in reducing fraud rates or chargebacks. I mean, chargeback is a major pain point, and if you can streamline that, or if you can avoid having chargebacks altogether, or reduce that number to a very low number, the merchant will be willing to pay for that.
Yeah. So again, it's where the pricing goes hand in hand with the value proposition.
Yes, you can't differentiate both.
Yeah, exactly. And the merchant's not going to care that it costs you X to produce this technology.
No.
Yeah, cool. All right then. So in terms of pricing models, what are some pricing models that you're seeing kind of evolve in the industry?
Well, for a long time, the main pricing model has been a per transaction pricing, where the merchant pay a fee per transaction, and that fee can be a percentage, or that can be a flat fee, or that can be a combination of both, plus a monthly fee for the service. So, for example, for payment gateway, you go a monthly fee and you go a per transaction fee. With the Acquire, will charge you a monthly fee and a discount rate, which is a per transaction fee, which can be again a mix of a percentage and an ad valorem fee. In some markets, we've seen pricing methodology evolve from something that's quite simple, having a single rate, because again, the smaller merchants don't want something complicated. So if you go to them with a very complex pricing, they will say, well, I don't understand it. How much am I paying? So a lot of them prefer a simple single rate. They say, well, I'm paying, and again, that's what PayPal has done for a long time, and what Stripe has done, and a few of the MPOS providers have been successful with, is you pay 2% or 2.2% for every transaction. For the provider, it's good because usually more profitable, you get more margin in that rate. It's a little bit more risky because it depends on the type of transactions the merchant is going to get. But overall, everybody's happy because the merchants got a simple rate that they understand. If you ask them how much you pay, they say, I pay 2.2%. And the acquirer is relatively happy because they've got relatively high margin on most transactions. But then obviously, then you've got more differentiated pricing where you have a fee for your domestic transaction and a fee for your foreign transactions. You may have a fee for your consumer card transaction and one for your commercial card transaction. And then you've got the more complicated models, which are the interchange plus or plus plus models, which are a fee per transaction depending on the type of card and where the card has been issued and the type of transaction. And that's obviously very complex. And the very large merchants prefer that because it's fully transparent, even though the price vary depending on the type of customers you get in your stores or on your website. There are other pricing methodologies that have been used in the past, less so at the moment, interestingly, but more like similar to the mobile phone plans, whereby the merchant pay a monthly fee, and that monthly fee includes a certain number of transactions. So, for example, in Australia, Belgium, Ireland, that was quite popular at some point, where the merchant will pay, let's say, £40 a month, and that includes up to 1,000 transactions, or up to a certain amount of transaction. And then anything above that, they will pay a percentage on top of that.
Yeah, and what do you think is sort of driving these different pricing, more preferred pricing models in different territories?
I think it's the providers testing what's the best for them and what's the easier one to sell and what merchants want. So they also ask, they test with merchants. Do you prefer a simple plan, or or a simple rate, or do you prefer a more transparent rate, which is going to be more complex to generate because it varies from transaction to transaction. And also knowing the fact that for very small merchant, they want simplicity. They don't want something very complex. So then you test, is a single blended rate the way, or is a monthly fee the best way to, or more or less all inclusive, the best way to do it. And then you look at how much money you're making with the various pricing methods.
Yeah. So similar to when we talked about sort of pain point analysis of, to sort of develop new propositions and value added feature, sounds like actually testing pricing to help optimize it with merchants is a good idea for payment service providers to be doing, and not get sort of complacent that the model that they've implemented is necessarily the right one from a revenue perspective. Yeah,
and being able to change the model. Again, some of the model will have to change depending on what's going on the regulatory front and so on. If the regulation means that there are less, the costing is easier than it was, then you may want to revert to something more simple. If the regulation makes it more complicated, then you have to go with a more complicated pricing methods.
Yeah, and what do you see in the way of pricing maturity across different markets? I mean, you gave some examples a minute ago, like Australia and Belgium, for example. Do you see any sort of big differences from markets, maybe pushed by regulation or merchant preferences, for example?
Yeah, well, I think there's a difference between developed markets and developing markets. I think in quite a lot of developing markets, the pricing is still relatively simple. In developed markets, it's more sophisticated. But then what's interesting is that there are markets where the type of pricing changes. So again, if I take Australia, they went through various phases of different type of pricing, and then they change. They do that for 5 years, and then they stop doing plans, and then they go into something else, which is partly driven by regulation, but not only.
Yeah, interesting. And are there any examples of where you've seen pricing done really well, or vice versa?
I've mostly seen example of pricing where it's not displayed very well. So interestingly, like in Canada, the regulator says that you have to show what is the effective discount rate on the statement, because if you don't show it, it's almost impossible for the merchant to know what their effective discount rate is. So the regulator says that's got to stop. You've got to make it really clear what is the effective discount rate, because if you look at the statement, it wasn't. And every time I look at a statement, I'm like, I don't know what the effective discount rate, and I'm not sure how the merchant will calculate what the effective discount rate is, apart from dividing your total your total fee, divide that by your sales, and you get an effective discount rate. But there are lots of fees that are added into that.
Mm-hmm. So it sounds like it's a really kind of careful balance of sort of, well, obviously being regulatory compliant in all cases, that goes without saying, but actually being transparent while also reducing the overwhelm.
Yeah, and I think, and probably the people would know the type of businesses that do it quite well are, Stripe, for example, is easy to understand. You usually have two rates. You go one for your domestic transaction and one for your foreign transactions, and that's it. And ADN is very transparent because they say, is the interchange, and we charge a fee on top of that.
Mm-hmm. And how do you think some of this pricing, both in terms of the pricing itself, but also the way that pricing is communicated, how do you think that is going to evolve as we see more and more value-added services being monetized?
And also to the point where, as I said before, you've got larger merchants with 7, 8, 10, 12, 15, 20 payments providers. So what is your cost there? Because you have to add all of these providers, and they've got different ways of pricing and so on. So it's becoming more complicated for the larger merchants because they've got all these different layers, and they've got to see what is the cost of each of the layer. And then when you speak to finance people and you ask them, do you know how much you pay exactly? And I've got to look at it, but they won't be able to tell you exactly how much they pay, which is probably good for the providers because there's less scrutiny. Yeah. But at the same time, it's making it challenging to actually see, where am I getting the value? Which provider is giving me the best value? Because it's not jumping out at them.
It feels like there's maybe a gap in the market there for someone who can crack that.
There's a big gap in the market, for sure.
Yeah. Okay. All right then. Arnaud, we've discussed a lot. We've covered a lot of ground in this session. I guess if you had to give a couple of top takeaways for any kind of payment service provider watching this, when it comes to pricing strategy, what sort of your golden nuggets of wisdom that you would share? Well,
my golden nugget of wisdom will be that now is a good time, because I think there's more appetite for merchants to pay for something that they're going to see is delivering benefits to their business. So I think there's definitely a lot of opportunities for providers because I think there's more appetite for merchants for new services, new products that is going to help them, because they understand now that it's important for them to make it easy for their consumers to transact with them in a frictionless environment. So there's definitely opportunities. The challenge for them is obviously, because it's a crowded, largely undifferentiated marketplace, the main challenge is how do you stand out, and how do you justify your pricing, or how do you price effectively to win business while making sure the merchants are seeing the benefits of what you can deliver. Yeah. So it's a massive opportunity.
Yeah, and that was beautifully pulled together. So thank you, Arnaud.
Thank you.
It's been an absolute pleasure talking with you. We always like to finish off with a quick question around, if you weren't in the payments industry and there's a parallel universe Arnaud out there, what would you be doing on a different plane?
Oh dear. When I was little, I wanted to be a professional footballer, but I was probably quite short, so I couldn't make it. Now I would probably... I've always dreamt of having a magazine. So that could be a kind of like a cultural, fashion, music type lifestyle magazine. I'll be an artist.
Oh, you're a man of many talents.
Well, not quite.
No, not a lot of aspirations, perhaps.
Yes.
You've done a brilliant job today. You could even maybe switch from magazines to podcasts instead.
Maybe.
Watch this space.
Thank you. Thank you.
Yeah, and cheers to you, Arnaud.
Cheers.